If you owe back taxes and you've been researching ways to deal with your tax debt, you've likely heard of the IRS Installment Agreement or payment plan. In fact, if you've actually spoken with the IRS on the phone, you've probably been encouraged to enter into a payment plan. But how do the payment plans work? How long are the repayment terms? And most importantly, how much will you have to pay each month? IRS installment agreements are the topic of today's video. On the other side of the break.
1-877-LEVY-KING, L-E-V-Y, Levy-King, 1-877-LEVY-KING, LEVY-KING.com.
Owe back taxes to the IRS? Call the Levy King. He's the best. 877-LEVY-KING, LEVY-KING.com.
1-877-LEVY-KING, LEVY-KING.com.
What's up, guys? Corey Hankerson here from Legacy Tax, and they call me the Levy King because I have helped thousands of clients with unfiled returns, back taxes, tax liens, and that's right, IRS levies. If the IRS took your check, the Levy King will get it back. 1-877-LEVY-KING. LEVY-KING.com. I'm also the author of End the Tax Nightmare, Insider Secrets to Beat the IRS and Reduce Your Tax Debt. Inside the book, I'll show you how to stop IRS levies, liens, and garnishments without paying the tax in full. How to set up the payment plan you want and not the one that they want. And how to potentially settle your tax debt for less than you actually owe. My book has been a top seller on Amazon for years, and you can buy it right now for $19.99. But I want to give you a copy of the book absolutely free. Just go over to my website, www.endthetaxnightmare.com, enter your name and email, and I'll send you a copy right away. No charge, not even for shipping. Totally free. Now, before we go any further with the video, please take a moment to subscribe to my channel, and don't forget to smash that like button for the YouTube algorithm. And hit that notification bell so you get a heads up each and every time we drop a new video. All right, guys, let's dive into today's content. I bet you didn't know that the vast majority of IRS cases end up in an installment agreement. I bet there's a lot of things you guys don't know about IRS installment agreements. So today, let's go over some of the frequently asked questions I get about payment plans or installment agreements. We're going to be using those two terms interchangeably today. First question is, what types of installment agreements does IRS offer? Well, there are three main types of payment plans. There are guaranteed, streamlined, and the partial pay installment agreement. So the first is the guarantee. If you owe less than $10,000 and you can pay the debt within 36 months, you can get into a guaranteed installment agreement. A streamlined installment agreement might be right for you if you owe less than $50,000 and you need more than 36 months, but not more than 72 months to pay the balance. Now, a partial pay installment agreement is when you cannot afford to pay the balance in full within 72 months. Oftentimes, a partial pay can result in you paying less than the full amount that you actually owe because it's based on what you can afford to pay, as opposed to the other two, which are just based on months, right? Where they take the balance and divide it by a certain number of months. The partial pay is based on what the IRS determines is your ability to repay the debt. So again, it's possible that with the partial pay, you can end up paying less than the full amount that you actually owe. So this one kind of feeds into the last question we got, the first one there. A question I hear all the time is, what is the minimum monthly payment for an IRS installment agreement? The minimum monthly payment depends on basically how much you owe in the case of a guaranteed or a streamlined. So with the guarantee, there really isn't a minimum payment. The IRS is pretty flexible as long as you pay the balance within 36 months or less. So you could simply take what you owe, divide it by 36, that's your monthly payment. Or you could decide on a lower monthly payment and pay, vary the monthly payments within that 36-month period. But bottom line is you got to pay it off in 36 months. With the streamlined, the IRS divides your balance by 72, and that's your payment amount, right? Again, whereas with the partial pay, the IRS determines your ability to repay, and that is your monthly payment. It is often the case, once again, that with the PPIA, your monthly payment will not be enough to pay the debt in full. So you're going to pay some of it, and then some of it will essentially be forgiven. The precise term is that it'll become non-collectible, but that's why they call it a partial pay, because you're going to pay some, and some will go unpaid. Okay, so the next question I get all the time is how long does it take, right? How long does it take for the IRS to approve an installment agreement? The IRS says that they will approve an installment agreement within 30 days. Now, that applies to a written installment agreement request that you file on Form 9465. That's also assuming that your case does not require management approval or any substantiation of the income and expense figures that you put on the form, right? You can also request an installment agreement by phone and you get an approval within hours. That's if you actually manage to get through to someone on collections. Oftentimes those hold times can be an hour or two or sometimes even more. But if you can get that done, you can get an installment agreement request by phone within a matter of hours. Again, that's if you don't require manager approval or substantiation of your income and expenses. If they do ask for approval, you're back at that 30-day or more waiting period that we mentioned earlier. So the next question is about penalties and interest. People often ask, do the penalties and interest stop when you're in an installment agreement? The answer there is no, particularly with respect to the interest. The interest will accumulate on an installment agreement until the balance is paid in full. So the amount of tax, the penalties, the interest, none of those things are reduced. Rather, the payments are simply spread out over the life of the agreement. In fact, the interest will continue to be added to the total amount owed so that the liability continues to increase oftentimes and not decrease. Penalties, on the other hand, such as failure to pay, will be reduced, but not eliminated completely. Okay, so this one might surprise you. The next question is, does the IRS always approve an installment agreement request? The answer there is no. The most common causes of denial is being out of compliance. Compliance generally means that you have filed all tax returns that are due, and if you are self-employed, you're making your estimated quarterly tax payments. Or if you're a W-2 employee, you have enough withholding coming out of your check so that you're not accumulating additional tax debt, right? Those are the general components of compliance. If you're not in compliance, the IRS normally will not let you set up a payment plan. Other common reasons include providing false or incorrect information on your application, underreporting your income, or making mathematical mistakes on your returns. Finally, the IRS will also reject your request if you are going through a bankruptcy. If you're currently in a bankruptcy case, then the IRS is pretty much going to reject any type of resolution that you propose, including a payment plan. Moving right along. All right, next question is, can I have two installment agreements at the same time? The answer there is also unfortunately no. All right, so let's say you have a payment plan for several years, and then you end up filing a tax return for a subsequent year that shows a balance due. People always want to know, well, can I just set up a new payment plan for that new year and still keep my old payment plan for the other tax years? You can't do that. IRS installment agreements are required to cover all tax years and all balances due. And if you file a new tax return that shows a balance due, you either got to pay it or call them to try to make some sort of modification. But you can't have two installment agreements at the same time. What's normally going to happen is if you file a tax return that shows a balance due, they're going to expect you to pay it right away. And if you don't, they're going to start sending you nasty letters. Okay, so this one comes up a lot. Can the IRS terminate my installment agreement? The answer there is yes. If you go into default, the IRS will likely terminate your installment agreement. The most common reasons for default are failing to file your tax return and pay your taxes in a future year, or not making your installment agreement payments on time. When you set up an installment agreement, you are required to file all future tax returns and pay the balances due with those tax returns on time. If you don't, you'll be considered in default. When the IRS defaults your installment agreement, you're going to receive a notice CP 523. This notice lets you know that if you don't cure the default, the IRS intends to terminate your installment agreement. Your case will go back into collections and they'll start the cycle all over again of garnishing your wages and levying your bank account. So you want to avoid defaults and terminations pretty much at all costs. All right, this next question goes along with the previous one. What to do after my installment agreement is terminated or rejected? When you receive the notice from the IRS about your rejected or defaulted installment agreement application, It's not the end of the story, right? You have the right to appeal that decision. Upon receipt of that rejection letter, you call the IRS using the phone number found on the official letter that they sent to you. Explain why you feel that your installment agreement should be approved or should not be defaulted in the case of a default. In simple cases, especially if the rejection was due to an error when you filled out the form, you might get an immediate response. If that doesn't work, you're going to need to file a formal appeal. You must include a written explanation as to why you are appealing the decision, along with any relevant law or sections of the tax code. You got 30 days to file an appeal. Appeals decisions are final, so that means you can't appeal an appeal. Therefore, you want to make sure that you fill out the appeals form correctly and include all the necessary information. This is probably not a situation for a DIY job, right? Do it yourself. Probably not in this case. Your best bet is to consult a tax professional such as an attorney or an enrolled agent. Finally, what if I can't afford my installment agreement? Many times taxpayers are so desperate to avoid a wage levy or a tax lien that they enter into a payment plan that they know they really can't afford, right? You know you couldn't afford to pay $2,000 a month, but you were so desperate to get out of collections, you were in a situation that you simply agreed to pay it anyway, knowing full well that there was no way you were going to be able to make that payment, right? If you can't afford your installment agreement, you should request a lower monthly payment. Go in and ask them to lower your payment. You pick up the phone, give them a call and ask them to lower it. If they won't agree to lower your monthly payment, at that point, you need to start considering other options to resolve your tax debt, such as the currently non-collectible or the offer in compromise. Speaking of tax debt, I want you to know that there are special programs in place to help you get a fresh start. But how do you know if you qualify? You see, no two cases are exactly alike, so how do you know exactly how much you can settle for? Well, I've created a free tool to help you get qualified for a fresh start. Just head over to www.LEVY-KING.com or click the link below, follow the prompts and answer a few simple questions, and we'll help you figure out your eligibility. That website again is www.LEVY-KING.com, or you can give us a call at 1-877-LEVY-KING. That's it for this week, guys. Talk to you later. Bye.